If you can develop a small pill for Alzheimer's disease that can definitively improve cognition, that would very likely become the most successful product in pharmaceutical history.
Nice.
Do you believe me? Well, don't take my word for it.
Ow!
This was a quote by a Bloomberg Biotech research analyst.
What's DD? Never heard of it. I like lighting money on fire. I'm in YOLO.
It's a scam. It's a fraud. It's going to zero guarantee. I will pay my broker 80% plus interest to short one of the most shorted stock on the market at a price that is down 80% plus from recent highs. Can't go tits up.
I've done my DD. I like lighting money on fire. I'm in YOLO.
So why does this Bloomberg quote matter? Well, what if I told you there's a company that may achieve this? And here's the really interesting thing. It's really small and hated. That's definitely not what she said. Given the massive potential upside, if there's ever a stock we need to study, it's this one. And I'm not kidding when I say I think it has one of the highest ceilings of any publicly traded companies. Luckily, I've spent years following this company. I'll be going over an overview of the company, why I think the stock is so fascinating, as well as the risks and my thoughts. You need to stick around because there are important lessons from this case study that you can take with you to build upon your investing edge. I'm regarded, and this is not financial advice. Cassava Sciences is a biotech company. They have a drug called simifilum. Simifilum is a pill that may work in treating Alzheimer's. We'll find out officially in a year and a half. First, let me explain the FDA approval process. Generally, FDA drug trials will consist of phase 1, 2, and 3. Upon passing all 3 phases, a drug is then approved. According to the FDA, 70% of drugs will pass phase 1, 33% of drugs will pass phase 2, and 25% of drugs will pass phase 3. However, as it relates to Alzheimer's, the pass rate is significantly lower. Like we're talking 99% failure rate. Cassava Sciences has passed phase 1 and 2, and they'll receive their phase 3 results in under 18 months. The company's phase 2 results were miles ahead of all the other Alzheimer's drugs. In fact, they'll easily pass phase 3 if they are able to replicate the phase 2 result. It's pretty simple at the end of the day. One of 2 things will happen. If it passes phase 3, investors and patients will be big happy and shorts will be big sad. If it doesn't pass phase 3, investors and patients, they'll be big sad and shorts will be big happy. There's a ton of scientific literature out there which, to be honest, is way too much for my galaxy brain to handle. Here's a smooth brain summary. Most Alzheimer drug research has approached it from the perspective of clearing amyloid out of the brain to improve cognition. Cassava's drug is different in that it is targeting and restoring a scaffolding protein called filament A to improve cognition. It's a bold and novel approach to Alzheimer's that's totally new and untested. Before we go on, I think it's important to provide a quick background on the biotech industry as a whole. Given that drug trials can cost hundreds of millions of dollars with low odds of passing all 3 phases, it's extremely risky. They are typically almost always funded by shareholders who, on average, will lose their money. The biotech space is very similar to venture investing, where only a small percentage of companies will go on to be wildly successful, while the rest goes to zero. I guess put another way, it's S tier on the tier list when it comes to degen risky investing. Because of the capital-intensive nature of the trials, coupled with the small probability of successful FDA approval, biotech companies typically reward their investors disproportionately higher in the event of FDA approval or buyout. This is to account for the higher risk the investors and shareholders must take on. And once there's enough data that proves that it's been sufficiently de-risked, that's typically when big pharma comes in for a partnership or buyout, allowing the small biotech company and their investors to exit and cash out on hopefully multi-baggers. Or alternatively, and the more likely scenario is that the biotech company fails their trials and the investors end up losing all of their money. Speaking of funding trials, it's important we take a look at Cassava's finances. The company has no debt, and they have enough cash to bring their phase 3 trials to completion. So how big is the total addressable market for Alzheimer's? It's one of the largest unmet medical needs in the world, with tens of millions of people suffering from it. It's also a huge financial burden on society at large, with an estimated annual cost of $1 trillion. Given the complexity of Alzheimer's, it should not come as a surprise that there's many risks and negatives to this company. Number 1, phase 2 results seemed almost too good to be true, and people are naturally doubtful given the historic probability of Alzheimer's drugs getting approved, which is under 1%, especially because it's coming from a small, relatively unknown company with no history of approved drugs. Number 2, the company messed up a few times in the past. For instance, the CEO said on an earnings call in 2021 that a non-dilutive and non-debt capital inflow is coming in the next few months. This was basically hinting at a partnership with Big Pharma, which never ended up happening. There is also some cloud around the phase 2 biomarker results, given that they were reanalyzed in Dr. Wang's lab, who owns equity in Cassava Sciences. It doesn't take a big brain to figure out there may be a conflict of interest there. Number 3, Cassava has consistently shown up on the list of the top 15 most shorted stocks for years now. It's made the shorts boatloads of money so far to date. Number 4, there's currently an ongoing class action lawsuit Cassava is facing, which, as I understand, is in mediation. Number 5, the company is also facing allegations of data manipulation and misrepresentation, and is being investigated by the DOJ and the SEC. Number 6, there's legitimate doubts on the efficacy of simufilam. For example, a Nobel Prize winner and neuroscientist said the following: "The findings of Cassava Sciences are not in the mainstream of the field, and to me, they seem implausible and contrived." Alright, I get it. That was a lot. Luckily, your boy cooked up something spicy. Given everything, what are my personal thoughts on Cassava Sciences? I feel like the current share price is already mostly pricing in the negatives. Just anecdotally, I've mentioned this to 7 friends, and only one ended up buying some shares. The rest mentioned that it's either too risky or they can't overlook the lawsuits and government investigations, which is totally fair. It sort of reminds me of Coinbase a year ago when it was trading at 1/5 of its current price. Back then, there was a lot of regulatory uncertainties due to their clash with the SEC surrounding whether tokens should be considered securities, among other factors. Similarly, Cassava also faces many uncertainties with respect to the SEC, the DOJ, lawsuits, and so on. The one thing I've learned is that the market hates uncertainties. If we're adding all of these additional uncertainties on top of the already uncertain nature of early-stage biotechs, it sort of makes sense that Cassava is down over 80%. If I was a short, would I short a company with the most promising phase 2 Alzheimer's results that's already down 80% from recent highs, with the potential to conservatively 10 times upon approval? The risk to reward just isn't there to short, in my opinion. Moreover, the company just recently announced a capital raise of over $500 million. If they end up raising all of it and they fail phase 3, the downside is only about 50% given the $500 million of balance sheet and the current market cap of roughly $1 billion. Because of this, I believe there's a strong likelihood of the stock appreciating in value leading up to the phase 3 data readout, as I believe the shorts will want to reduce their risk exposure. That's what I do at least, but I'm pretty regarded, so. I also believe leading up to the phase 3 data readout, there will be increased buying pressure due to the big brains understanding time value of money and not wanting to leave money in a stock with no significant catalyst for years. Ultimately, I just think there's so much noise surrounding this stock, whether it's from the shorts allegations, which some are valid to be honest, or the lawsuits, or the SEC and DOJ investigations, and so on. None of that really matters if the drug is proven to work, and I think many lost sight of that. Let's do some quick back of the paper napkin math. The current market cap is $1 billion. Reasonable market cap upon approval, in my opinion, is 15 to 20 billion conservatively, and this is based on just a fraction of the US Alzheimer's market and a price that's similar to existing treatment costs. Let's use the lower range. That means the market is pricing in about a 6% chance of approval. Do keep in mind that if this drug is proven to be effective, there's a very small possibility of it being expanded to be offered to the wider elderly population as a preventative measure. If we want to use our imagination, the sheer size and potential of this could be more lucrative than semaglutides, and I don't say that lightly. At that point, we're talking hundreds of billions in market cap. If the momentum returns, which I believe it will at some point, I believe the stock has one of the best and easy to understand stories. It's like pouring gasoline on the fire. I think we often underappreciate just how much stories and narratives can drive prices and valuations to the extremes, up or down. Taking the concept of the black swan from Nassim Taleb, our minds will not allow us to accept things that are first-time events or super anomalies. By default, it doesn't allow us to believe in the statistical likelihood of it happening, even if the data says otherwise. I believe this to be especially true for Cassava Sciences, given their unprecedented Phase 2 data. Now, just to be clear, I am being conservative, and I don't believe there's a high likelihood of them passing Phase 3, given how complex Alzheimer's is. That said, based on my personal expected value calculation, I personally believe the market is severely undervaluing this company at $1 billion market cap. So how am I playing this? It's super high risk, and I totally accept that I will most likely lose all of my money in most scenarios. That said, I think the most optimal play for me is out the money 2025 and 2026 call options. If they fail Phase 3, the stock is going to tank. So if the stock and call options both have large downsides, and the options have much higher upside, the choice is pretty clear to me. Speaking of options, the implied volatility is currently only 70%, which I believe to be low. For reference, Coinbase options are currently at 85%. The market doesn't think Cassava will be volatile, which I strongly disagree with. If you YOLO your life savings into this, you're probably regarded. Or a genius, but probably regarded.